Trump's trade war, terrorism, gee, that's giving me the you-know-whats. ScoMo-led recovery, is it coming? And what stocks to buy? I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. Well, I tell you what, Paul, I've tried to like Trump. I've loved some of the positives he's done for the market. But this trade war thing, it's starting to look like economic terrorism. You said the bond market got really creepy this morning.
Yeah, look, in the US, I mean, obviously people are now starting to think about the trade war going on longer than we'd hoped for.
Yeah.
And look, concerns about the US economy, about really are there some signs that perhaps it's starting to slow more than expected. So that's why bond rates this morning in the US down to 2.26%. And put that in context, Peter, it wasn't that long ago when bond rates were, this is 10-year bonds, were at 3.2%, going to the moon according to everyone. Yeah. Now they're going the other way.
Well, optimism sends them to the moon and pessimism brings it down.
So we're going to get more talk, I guess, of a recession. And so the inverted yield curve people will come out again shortly. Yeah. It's not inverted at the moment technically, but they'll talk about it being inverted if you want to look at it. So I mean, look, he's got to get onto this, but he seems in no hurry, and the market's probably going to get a pretty nervous ahead of that.
Yeah, I know it's ridiculous trying to use rationality to understand Trump,
and we've tried that before, Peter, and failed dismally.
That's right. But the rational person says he can't afford a recession, he can't afford a stock market crash before election in November 2020. That's the rational thing. What is he thinking?
Look, you're asking me to decipher what Donald is thinking. Yeah. I don't know, Peter. I mean, but I think we're seeing it in the prices in the US, so certainly nervousness taking over. Interesting, Peter, that look, whether it's again going to be a case of go away in May, I mean, look, the US market in May is down. We're up, and we're up now this year, calendar year so far, just on 17% to the close of business yesterday.
So stock market spruikers like us were right.
So spruikers have been right, but we're sort of going outside the US at the moment, and you worry that our market looks a little vulnerable while the US is heading the other way. So
a Trump correction.
A Trump correction is possible.
Yeah. Okay. Now, what about talking about the opposite of Trump? ScoMo. The markets have loved it. Like, what was Westpac up 10% last week?
The ScoMo-led recovery, and look, long may it continue. But I just can't. I look at the market. I just think it's so expensive to me.
Well, that's our next topic. You can't start talking about that. I want to talk about do you believe that ScoMo is going to help the economy for the rest of this year?
Well, I think he's not going to do anything bad for the economy. So we'll get a tax cut through.
That's already a tick.
Already the $530. Hopefully the other $580 will get legislated in July. So people, when they do lodge their tax returns for the 18-19 year, well, that's the low and middle incomers. Low and middle income earners will get $1,080 back.
Good for retail.
As a rebate. And he hopefully get his other tax cuts through at least as a promise to go. So you've got a government that should be stimulating. I saw Matt Common from the CBA yesterday said Reserve Bank doesn't need to cut rates. It needs to, government should be stimulating.
And he was saying the application for loans have already shot up.
Yeah, and look, and that's not surprising because we know that elections are bad for all parts of markets. People defer major purchases, and they do defer putting off a home. And we had a very negative set of anti-housing policies from
APRA in particular.
Yeah, from APRA, and that's changing. So it's not surprising to see a little bit of recovery in the home loan market. So look, that's got to be good for our economy, and the dollar below 70 cents.
Dollar as well.
Whether that translates much more into the stock market, Peter, I'm not sure, but we've seen the bump. And question is, I just think the market's now getting a bit pricey.
Yeah, and post-election, confidence usually rebounds. ScoMo won't persecute the banks. Putting it all together, you kind of think this economy should pick up. But of course, Trump could be the fly in the ointment. Finally, we've been talking about this, what stocks to buy, and you're finding it very hard.
I'm finding it really hard. There might be a little bit of attraction in some of the small caps, Peter. I'm finding it hard because we've seen, you know, if you look at the key parts of our market, you've seen the banks on a bit of a rebound, but look, there's still challenges there. I like banks simply because of the yield. I think the yield's going to be there, but there's almost no growth. Yeah. The miners are up because of the iron ore price. That's caused by the disruption in Brazil. Yeah. Maybe that keeps going. You know, there's a lot of forecasts out there, iron ore, so you can't be sort of too short the miners because they're driving it. The IT stocks have followed what's going on Wall Street. Yeah,
and they've gone mad. You can't say Afterpay and all these stocks are a good value. They might be accurately priced, but but they're not good value.
And then the yield stocks like the Transurbans and the Sydney airports, the property trusts, they're all through the roof because
interest rates are going down.
Rates are down. So, and then you look at the cyclicals and the earnings data is just not there. So some of the major cyclicals are actually giving us profit warnings. So it is hard to see where to put the money in the market. That's one of the reasons I think that I'm sort of lightening off a little bit. But conversely, and as this was pointed out on Monday, there's no new supply, and markets are fundamentally about supply and demand.
Not many IPOs.
No IPOs, almost no IPOs. We're seeing all the funds come back from the buyback. So ahead of the change with the supposed change with Billy Shorten, we had BHP do an off-market buyback, Rio do an off-market buyback.
Bill actually helped the stock market.
Woolworths do an off-market buyback. We had a whole lot of payments of special dividends. We had a lot of money go into shareholders' hands. So that creates demand. There's not much supply. And so I think it's as much a supply and demand market at the moment, but eventually the global factors will take over. So I'm not signalling our market's going to turn around and go horribly the other way, but I'm just struggling to find what to buy. And I guess I'm just looking now outside the stock market.
And some people will take profit, which will probably take the market down. And we're waiting for Trump. That's the next leg up, isn't it, Paul? Because if Trump gets a trade deal, the views on global growth go up, then the growth locally is improved, potential profits and share prices can go up.
We've said stay long. We've all along, and for consistently they're seeing, at the end of April said the market's going to go higher, and it has gone higher, but there comes a point where you need another catalyst, and I just think the catalyst ain't there at the moment. No. So
Donald is the catalyst.
Donald is the catalyst. I think you just got to be patient in this market and wait for the opportunity.
Okay, I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.